Good morning and welcome back to Market Day Report. I'm Chris Swift. We have heard the opening bell ring. Let's see if we got much change going on in the corn market here. First thing we're going to be looking at, July down 3 3/4 now, 415 1/4. December corn down 3/2 at 443 1/4 and not carrying a whole lot of premium all the way out to May at 467 down 4. Let's see if the soybean market's any better. It's soft. August down 2.5 at 1125 1/4. Sep down 2 3/4 at 1123 1/4. November 1136 down 2.5. Not a whole lot of spread between all of those contract months. See what Chicago wheat's doing. It's softer again, down 3/4 on the Sep, 598 3/4. East wheat down 1.5 at 615 3/4. Kansas City hard red winter wheat. It's a little bit firmer. I got September up a penny, 641 1/4. December, 656 1/4, up 3/4, all the way out to May, carrying about a 20-cent premium, 676 1/4, down 3/4 on the day. A little peek at cotton, see what it's doing. It was firmer earlier when we looked at it, and still is. I got October up 92 at 74.20, and that new crop December at 76.32, up 102. I got Brady Huck on the line here. And Brady, we've got a WASDE report. We got some weather coming in, and there's no telling what else is going to happen in military actions over there. So what's your best take on it this morning?
Well, one thing I wish that was happening was that we saw a little more green on the screen here this morning. We had a nice day in the grain markets yesterday. They didn't hold their values very well, and I was afraid that we'd see a little weakness here after yesterday's price action again today. So disappointing, but there's just more sellers and buyers in this market right now. That's just the plain, simple truth of it, and is what it is. So we had some export sales out this morning, solid for corn and wheat, a little bit weak for soybeans. After the break in the board that we've seen, you want to see demand come in and buy this market. We've seen a bit of that for corn, but Brazil remains the main source for global soybean purchases. We did not have any export flashes this morning, nor did we yesterday. We started the week out getting a couple of those daily export flashes. I'd like to have seen that continue throughout the rest of the week, but just a little disappointing that we're not seeing more buyers continue to come in and support this market right now. Like you said, Chris, though, today we get the WASDE report. We'll get some fresh data to crunch through and chew. Not typically a big report, but you never know with the USDA what they'll print and if anything will surprise us. I'm going to be personally looking for, what they do with the HRW wheat crop, see if they do any adjustments on the production size there. Also be watching the Brazil and Argentina corn and bean numbers as well to see if they increase those at all.
Sure. Back in May when we were really hyped up, and that's when we saw the majority of our higher prices on there, there was a lot of talk of renewed Chinese business, and that kind of fell to the wayside. Do we think that our farmers were able to market quite a bit of that product when it was above 5 in the corn, or once it started down, did they just freeze? And I would kind of like to know where that farmer is in his marketing.
I think, yeah, those May opportunities were great opportunities. Hopefully you rewarded those rallies and rewarded that market. Good opportunities in hindsight. But Chris, we know when those markets rallies, it's easy to get bulled up and think that it's going to continue to get better and go higher the next day. So you got to be disciplined in your risk management, use multiple tools to come in and enable you to execute, at least establish a floor, do something to protect those rallies when they happen, and keep your crop insurance floor in mind. When you get an elevated price that's above your crop insurance, what are you doing to manage that gap between your crop insurance and where the market is? You look at the markets now and you can say, hey, where's my crop insurance floor at? And do I need to actually protect downside here? Those are personal questions on your own farm you got to evaluate.
Sure. And right now we're kind of very close to contract lows in a lot of those corn crop contract months. So it's going to be really testy to see how we market going forward on here. Brady, stick around, stay with us. We're going to wait, take a real quick commercial break, and we'll be right back. Welcome back to Market Day Report. Let's take a look at our livestock markets. A little mixed in behind us after a really strong close on yesterday. I've heard of very little cash trade having taken place just yet, but June currently up 40, 250.50. These are all in a very positive basis where the cash markets are trading considerably higher than what the futures are right now. August down 7 at 241.42. December up 22 at 233.05. The feeder cattle market, it's a little bit firmer. I got August up 92 at 355.30. That feeder cattle index today should be very close to about 370.10. That'd be up a little over 204. And I'm pretty sure boxes yesterday closed 393.28 on the choice and 375.50 on the select. That September contract at 352.62 is carrying about an $18 discount to the cash market right now, but is up $1.25 all the way out to Jan, where the big discount is 338.25, up 57. In the hog market, let's see what we got going there. We're a little bit firmer. We got July up 7 at 96.92. Yesterday's lean hog index was at 92.63, so we see the June has already converged to that. August, probably July and August still the highest contract months, about $3 or $4 still left to go in that to converge there if the index doesn't go up more. December up 22 at 74.25 in the hog market. Let's ask Brady to come back in again, talk a little bit about the cattle market. We know we've seen all kinds of news about the screw fly, but again, we've not seen a great deal of change in beef production nor cattle production.
Right, yeah, the trade is definitely handling the news of the screwworm pretty well considering all things. So it was kind of a sell the rumor, buy the fact, or whatever, however you want to say that. So yeah, cash trade this week, small so far. We'll see. I think everybody's kind of hoping for steady. We'd love to see higher, but steady would be maybe a small win right now. This market's really resilient. We had some weakness in equities yesterday, and the beef market held up in there pretty well. So that's good to see in the face of weaker equities and higher energy markets. Like you said, the box beef holding in that 390 area. Where can we add value on this cutout? That's one of the biggest questions I have going forward. Which primal can elevate us back above 4? Do we need to go back above 4? But at least holding steady in this 390 level is good. May was beef month, but June is also an important month for beef demand. Consumer demand continues to drive this market, Chris. They remain resilient. They like the taste of beef. It's delicious, nutritious, and I wouldn't want anything else.
Well, that's a good commercial for beef there. Well, interestingly enough, as we have seen the cash prices there and the box beef prices, it does show that it's kind of stabilized a little bit. The consumer may not be eating more or willing to pay more, but they haven't reduced that any yet either. And I think that box reflection is in that box beef price. I know that weights are still high. I believe 985 was our carcass weight last week on there. So our beef production continues to be elevated quite a bit. And then we saw a little bit of a reduction in the cow slaughter and in the total cow slaughter on there. And still, I've watched those charts by Dr. Darrell Peel of just a little bit of expansion taking place in the cattle market as well. So it's kind of getting down to a status quo type situation, looks like.
We need a fresh story. We know a lot of the news, the knowns, the screwworm. We talk about drought. Are we going to expand the herd? Maybe there's some start of expansion, but what happens on the back end with cull cows when you're facing drought out there? In half the cattle, 54% of the nation's cattle are in some sort of drought right now, D1 to D4. That's off from where we were. We need green grass out there and confidence in the market, confidence that we have cheap feed and good pasture conditions to go out there and expand the herd. And some chatter that maybe that gets delayed further down the road. We'll see. I like that you also highlighted, Chris, the deferred values in feeders and being such a discount to the upfront feeder cattle index, the index currently around 370. And you got to rewind the clock a little bit, though. And 1 year ago, we were 310 to 315 on the index. And 2 years ago, we were 250 on the index. So still, despite the pullback, we've seen some good values out there to go protect. I want to be optimistic. I want to be a bull this market. I'd love to see us run up to $3.80 and $4 again, but not bad prices still today for the cow-calf guy.
Absolutely. Brady, really do appreciate you taking the time to be with us this morning. That is Brady Huck.